Yo, 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 how's everybody doing? All right. What's up, Bull Runner? How you doing, man? Andrew Cameron in the house. Good to see you, bro. John Santos, welcome back, man. Fakir, good to see you. Jilly, welcome back. Cubanadian, it's good to see you, man. Max, why are you angry with yourself, man? It's good to have you in here, though, man. Hey, Kelly, how you doing? All right, let's jump on into this. I've got some sauce to show you guys. Because I know that some of the things that I called in the Discord may not make sense and may need some more explanation. So we had what I would call an A+ setup this morning. So if you guys have been here for a while, you guys know that I tell you guys to watch for, whenever we're dumping, to watch for an external 5-minute Heiken Ashi market structure break. For those of you that might not know market structure that well, basically what you're looking for is and for something to be a valid high or low, there has to be two candles moving in the same direction. So for example, this right here would not be a valid high, it's just one candle, right? But basically, you need to see a lower low followed by a higher high externally, which means like this, right? Like this, right? Not like this. No, not like this. This would not count. Now, why would this not count? Because this is internal structure, right? So think of external structure like the high that got us here. The high that got us here. This is a higher low, which means that this is an internal structure break. Now, why is that important? Well, I'll tell you why. Because back here, right? So we break external. Oh, wait. No, I did mute it for you guys. That's my phone. Okay, cool. Progress. That's progress. Okay, anyway, why is that important? Well, that's important because where do we see our first external market structure break? Well, on the 5-minute, we see it here, in the bear side, right? What's up, Django? Good to have you here. What's up, Barb? Good to see you back in here. Risk management, don't forget it. Thank you, John. I appreciate you. Appreciate you, man. So we have our first bearish market structure break here, right? That's what kind of starts this move down on the 5-minute. Now, why is it important that I drew these out here? Because if you look for internal market structure breaks, you will get faked out. Where would you get faked out? Well, you would get faked out, for example, right here. Because that looks like a market structure break. Or sorry, hold on. Right? But this is actually, this is kind of a bad example. Let's use this one here. Right? Would we consider this a 5-minute break of structure? No. Because this is a higher low than that one, so it's internal, so we wouldn't long this. The relevant high would be here. Now, based on looking at this, I'm guessing this mumbo jumbo right here was probably the New York Open. That's what this looks like. Yes, this was New York Open. So we're going to talk about a couple things today. So actually, I like this. I like looking at this because we get to see it happen to the upside and to the downside. So you get your SFP here. So you're looking for a break of structure to the upside, right? Now, you get one, but this is important. So if you don't have this fib set up on your chart or on one of your saved layouts, set this fib up. Change it to levels as percentages. Put in 0 0.25, 0.5, 0.75, 1, 1.25, and negative 0.25. Screenshot this if you need to, right? Now, what this shows us is if something is a valid breakout or simply a range deviation, right? So if we take our high to our low here, and I think this was probably the orb as well or something like that, right? But this is your relevant high and low. And this shows the 125% range deviation level. If you notice, we came up, we wicked into this level, we didn't get above it at all, and then we closed below to the downside. This gives you direction here. Now the best short RR was here, right? Because I don't want to be short on this if there's a close up here, right? I don't want to be short up here. So why is that the best RR? Well, because you're able to use a really tight stop loss, and just to the low of the range, that's a 5-to-1. Now all the way down here, that's a 17-to-1, right? These are the ways you can get really high RR trades. There's a video on my channel called trading ranges and range deviations, how to get high RR trades. After the stream or sometime, bookmark that, go watch it. All right. So how is this important today, right? So more important than a 5-minute break of structure on Heiken Ash candles would be a 15-minute break of structure. And when you get those together, it's great, right? So let's look at where we were when we woke up, right? So we had put in this break of structure here on the 5-minute, right? Now, what happened here? We put in a break of structure. We didn't get above the range deviation level, so it could just be a deviation upwards, right? What happens? We come back down. We SFP the low. Now, this is when I get excited, okay? But if you're in the Discord, you know that I wasn't telling you to long here, right? Because we don't long the SFP. We're not whisk whisperers, right? Maybe you are, right? But we don't generally long the SFP unless we have a break of structure first, right? Which, I mean, technically you could, but it was going into New York. I just would rather be safe, and I wanted to see like a breakout. But so once we did this and we came up on the 15-minute and we broke market structure, yeah, you can long there. But like, see, you long there, it comes up and it stops you out, right? Anyway, yes, that would be a valid long setup because you did have the 5-minute break of structure first. But that's not really the point here. The point is you have this 15-minute break here. You have this SFP break of structure. Now, anyone who's been following me for a little while, we call this pattern the JPAL pattern because it prints money, right? When you see a SFP and a break of structure on Heiken Ashy candles, it's generally a good sign that the trend is reversing. So the first long that I signaled this morning was this golden pocket long. This golden pocket long here. If you're in the Discord, you saw me signal this scalp this morning. That was before we had this big deviation down here. And I said, hey, there's a good scalp RR here with your stop loss below. Leave a little room for the SFP. Now, my fault was I didn't give you guys a wide enough stop loss to give room for the SFP, right? I didn't draw my range deviation. I was kind of rushing to put the signal out. And that first long got stopped out, right? But after that, I was looking at this and I was saying, hey, we got a 15-minute break in market structure. Let me see if this looks like a range deviation down here. So we took our range. And you'll notice that we put in a perfect 15-minute range deviation down here. I actually didn't even have my exchange open, and I rushed to open my exchange as soon as I saw this, right? 1, we're at a spider line. 2, we just had a SFP break of structure on the 15-minute. Everybody was waiting for this. They got in. They stopped everybody out. CryptoFace had just put to go long on YouTube, right? Everybody's long. Everybody's stop loss is here. Come down, deviate the range, break back up. Why is this long so good? Well, this long is so good. I mean, obviously, it'd be better if you got in like either right on the range reclaim or somewhere down here. But let's say you got in right on the range reclaim. To the top of the range, that's already a 4-to-1. To like your range deviation level on the top, it's a 5-to-1, and it just starts getting more and more crazy, right? Like to these previous highs, it's a 7.36-to-1, right? So that's why these range deviation levels are so good. It's because it gives you an area where I don't want to own this asset if it gets outside of this range, right? So I have a clear invalidation point, and I have clear targets, and I have a high risk to reward. If I have a 5 risk to reward on this trade, that means I can take this trade. Let's say I take this trade 7 times, and I only win 3 of them, I'm profitable, right? So this is a good segue into risk management, right? If you're taking high RR trades, that will insulate you from needing to win more than half of your trades, or even needing to win more than a third of your trades, right? If I'm only taking 7 RR trades, then I can win, let's say, 25% of my trades, and I can be profitable, right? So I hope that makes a little bit of sense out of the things that I shared in the Discord this morning and why I was so happy to get long this morning. Now, let me see if I can find it here. Sorry about that, guys. 1 second. Okay. Yeah. Let me put this here. Now, I closed the trade. I closed half the trade here, and I moved my stop loss to entry, right? Generally, I wouldn't do that, but I did that because, I wasn't really trying to watch the trade all day. But when I entered the trade, my original target was the top of the range at 118,500. Now, the reason that I closed it there, so let's see, where's my entry? 211. Oh, I did get in the range deviation a little bit. Cool. Yeah, so the reason I closed it here was because it was a 3R. I closed it here because it was a 3 risk to reward. So I was like, I'm going to lock in some win at a 3 risk to reward, and I'm going to close it. One thing that's important when you're taking high RR trades is that you actually let that high RR play out, right? So the reason I didn't close it here, for example, at like 117 is because that's a 1 to 178, right? I'm not insulating myself from losses if I'm closing a trade at a 1 to 178, right? It's not worth it. Now, if I had let this run, like my original idea, let it run to the highs, that's a 4 to 6.2, right? It's better, but I got my 3RR. So I was happy with that. And I was like, you know what, I'll just move the stop to entry. But you can see, like, you have to let these trades play out. Hitting your stop loss is a win. If you made a plan, you managed your risk, and your stop loss gets hit, you've won. You've done everything that you need to do as a trader to be profitable. It just wasn't in the cards this time, right? But you'll hit the next one, and by letting your RR play out, it actually allows you to insulate yourself from those losses. Whereas if I take 10 of these trades, but I'm closing them at a 1 to 1 RR because I'm scared of losing money, then when I actually do lose money, I'm going to lose everything that I just won. It's going to be pointless, right? So it's important not only that you manage your risk and take high RR trades, it's also important that you let your RR play out, right? But we did come above like some bearish moving averages here and stuff. So there was some confluences for why I took profit here with the 3RR as well. But yeah, the original trade, leaving the original trade to play out would have been better, obviously, right? You guys can see. But hopefully that explains a little bit about like why I was a little more hesitant to enter a position this morning while I was waiting for some confirmations. Then once we finally got those confirmations, then I was like, okay, it's time to long now, right? Because you don't want to just get chopped up in this. But yeah, so that's why this setup this morning was so good. We had SFP break of structure range deviation. It's like an A+++ setup right there. Also on a spider line. I love when I can put my stop loss below a spider line. It's great. Okay. Does that make sense, guys? Put a 1 in the chat if that makes sense. Cool. Thanks, Shango. All right. So I just wanted to do a quick lesson on that while at the start here, because I want to make sure that if I'm giving you guys signals in the Discord that you guys understand. Look at coins later like to nominate. Okay, Ladio, no worries. Yeah, we'll run it. No worries. That may take a couple times to sink in, but also, I mean, you've been around, you know. But I'll also go over this. I'll hammer range deviations into you guys' minds like 100 times because it really is like, you know what? We're gonna do it again. Sorry to everybody who's seen this a million times, but we're gonna do this again for the new people. So, if you weren't here before, on the daily, how do we catch the best swing trade here? It's the exact same idea, right? On the daily, we put in a high and a low back in this range. What do? We put in like a PO2 or a PO1 accumulation, but that doesn't really matter. But we put in a high and a low. We came down. We didn't close below the range deviation. We would have taken along here, right? Targeting the premium of the range. We hit the premium of the range. We came down again. We put in a big wick here, and we closed back above the range deviation. I took a long right here, targeting the premium of the range again, right? And this is how we catch these major lows. We did it back here on the 1 hour. It's back in here. Man, this feels like forever ago, guys. That's crazy. Was that here? No. That was here. Yeah, that was here. We put in this range, right? We came down. We had 1, 2, 3 range deviation long chances, right? And why are these so good? Because if we come below this level, we don't want to own the asset, right? It's going to correct. So that's how we're able to, all the way up, catch these longs from the lows of the range. So it works on both these lower time frames, like your 5-minute, 15-minute. It also works on your daily. It works on your weekly. It works on every single time frame. So understanding this stuff is going to be extremely profitable for you. And if you stick around, I'm going to go over this stuff a lot. But yeah. Okay. Sorry for everyone who's heard that a bunch of times, but it's really, really important. On Pancho, thanks, man. I'm glad that you're finding value in it, man. Okay. I lost my train of thought. What were we looking at? Okay, so that's the lesson on range deviations. So, yeah. Let's move on. Okay. So, we had our candle that had weakness in it, right? Here. We cooled off on the CPI data print. The 4 hour still bullish above here, right? This is your relevant 4 hour low. It's the same. Now, something to be aware of, right? 3 hour. 3 hour has flipped bearish. 3 hour flip bearish here. So 3 hour and down, except for the 15 minutes now. 30 might be bullish as well. Yes, no. So, important high to mark out, this high right here. This would turn your 30-minute bullish. Would it turn your hour bullish? Ooh, yes, it would. Okay, this is an important level to mark on your chart. 118,544.6. If you want to be more safe about it, 119,200. If we get above 119,200 on the 1 hour, you would have, well, actually, we can use this low because this was a deviation. 119,063. If we close an hourly candle above 119,063, our direction on our 30-minute and 1 hour would confirm that it's not a deviation, that we're actually moving up more. Now, whether that's just coming back to the golden pocket here, so like 120, like 120K, like 120,500, like sweeping these highs probably. or coming back up, we don't know yet. But if it closes above 119.064, I would say we're probably coming to this golden pocket. This golden pocket here. Okay? So that's the level to watch. Right now we're in premium, so you shouldn't be longing here. You should not be longing in premium. You should be waiting. Right? Range, initiation, mitigation, continuation. Long here. But anyway, this also just looks like an FOMC pattern on the 15-minute. Like, yeah, your heartbeat, your drift up. Looks like a news pattern. Oh, Andrew Cameron, it looks like your news pattern, bro. It looks like your kill zones. Let's put our kill zones on here. Let's see. Where are they not? Oh, here we go. Yeah, look at that. Sweep the London low, or sweep the London high, sweep the London low. So yeah, there's one more kill zone left up here at like 120K. Yeah, there you go. And there's another kill zone here at 118.5. So yeah, that's what it looks like. Yeah, for laser we can. So the way I do structure, I know it's a little different than the way that Kyle does structure, but I do structure using closes. So whereas like Kyle would say that this is a break of structure. Oh, well, hold on. I would say this is an SFP, not a break of structure. But yeah, some people use wicks, some people use bodies. But one thing I will clarify. So if you get a wick down followed by a break of structure in the other direction, I would consider that like an external market structure break, because it failed to break lower and broke higher. So it would be an external market structure break, whereas just the SFP alone, I wouldn't consider a break down, if that makes sense. Only when applied to a break of structure in the other direction. That's a little complicated, but I hope that makes sense. Okay, so we did get a break of this downwards momentum. We're just ranging here, seeing if we can break the highs. So 2 hour. 2 hour breaks bullish back up. So this is interesting because now we're in a situation where we have the 4 hour and up are bullish. The 2 hour to the 30-minute to the 1 hour. Well, I guess, okay. Yeah, if we break up here, then we have the 30-minute, the 1 hour down to be bullish, the 2 and 3 hour bearish until we break here, and the 4 hour bullish. Which is what you would expect, right, in market structure analysis, right? Just to give a brief little note on market structure trading, right? So obviously we know the monthly down to like the daily is bullish, right? We know the 4 hour is bullish. So whenever you're getting these corrections here, you're not trading the correction, right? Like I tell you guys to trade with the market structure. If you caught this short and you made money, awesome. I'm happy for you. I'm glad you made money. But if you're trying to trend trade with the trend, then what you're waiting for is like, let's say you're waiting for the 30-minute to flip bullish to match with the 4 hour. Because then you're catching the highest likelihood point where the trend is going to continue from the correction low, right? Because based on market structure, we would assume that as long as the 4 hour stays above our relevant 4 hour low, that wherever this is going to retrace to is going to be a higher low for an eventual higher high. So what are we as market structure traders trying to do? We are trying to participate in this next leg for the cheapest amount of risk. We are trying to get in for this next move at a high probability reversal point where we can then catch the majority of this next leg up. And the way that you do that is by identifying points in the chart where the 15-minute, for example, SFP is the low, breaks the high, flips your external market structure, And if you can put a range deviation in there, by golly, that's way better because your risk is only, what was my risk there? It was like 116 to 22 to the low, 0.5%. So let's put this on the chart. Your risk is 0.5%, and you're standing to gain. It's like the R&R gets crazy, right? Which is my point. You take one of these trades, you could take 27 of these trades and win one of them, and you would be at break even, right? So just something to keep in mind. Assuming you let the full RR play out. Like, obviously that's a little of a ridiculous situation, right? Like, most people are not going to let that play out. Some might, but I'm just trying to cement in you guys' head, like, how important it is to take high RR trades. Okay. PPI tomorrow. How does it get swept today? Yeah. I mean, Andrew, we have like 3 hits to the low here, right? So what I like about this is that everybody got long in here, right? Everybody got long in here. Literally everyone. Everyone got long in here. And then what happens? Oh, damn it, we're going lower. All right, I'm out. Stopped out. Drift up, right? At least from like a market maker's perspective. Unless you're Joey and then you got short here. Big gangster, I guess. Okay. Now, so that's why I like to set up. Let's look at, looking at regression trends here. So when we look at the 1 hour regression trend, so it looked good this morning, right? But I told you guys in the Cipher Matrix chat, I was like, hey, if you guys, I know this looks great, right? And maybe some of you guys got long here and are still holding it, great. But I said you want to wait for this trend ribbon to flip blue, and you want to buy underneath it. Now, I'm glad we went live right now because if you look at it now, we are starting to get those conditions, right? So we hit the reversal band. We got our buy signal. We're at the bottom of the regression trend. Generally, we would be expecting a bounce here. We're getting a trend ribbon flip here. If we come below that trend ribbon, it's probably a pretty good time to buy for continuation, right? So, and if you'll notice, right, like we've been in this massive uptrend, right? On Cipher Matrix, this was the last buy signal. It looks really similar to what we have right now, right? What happened after that? Continuation to the upside, right? Before that, this was our last buy signal, which would be the equivalent to like, well, once the trend ribbon turned blue, it was pretty much off to the races. But yeah, like whenever you see all of the signals in one direction, when you finally get that signal and in the other direction, it's generally going to be a good trend re-entry, right? So it's important to keep that in mind. Like when we're in like these downtrends, right? We start seeing buy signals in all these directions. We didn't even get a sell signal there. But yeah, just trust me. Whenever I mean, you guys see that all the time. You guys use this. But yeah, like the 12-hour, for example, what we were talking about before. Yeah, so like the 12-hour, right? Like I was talking to you guys before. You see all of the signals on the sell side because we're in a massive uptrend, right? Where's the best time to re-enter? Well, the first buy signal from the bottom of the regression trend, right? You're going to see this over and over again on every time frame, right? We're in a downtrend. We start seeing a lot of buy signals, sell signal, good re-entry point, right? So you want to take the signals that are in the direction of trend. You know, Alex Crypto says this a lot too, right? Like if you're going to take the shorts here, you're just looking for a pullback to get out. You're not looking for the home run. You're going to take the shorts here, you're just looking for a pullback to get out underneath the band maybe, right? Now, if you're taking the signal in direction with trend, then you're looking for a little bit more of a home run, right? So I hope that makes sense in terms of cipher matrix signals, right? Cool. Okay. We bounced right. Oh, wow. We bounced right from that 12-hour discount here as well. Underneath the, yeah, look, underneath the trend ribbon, remember? When in doubt, zoom out. Underneath the trend ribbon, we got a nice bounce from under there. That's cool. I hadn't even looked at that yet. Okay. Any questions on anything we've gone over so far? All right, awesome. Don't forget to like the stream, guys. All right, let's look at our 6 hour. Six-hour SFP this low a lot. I like this. If the 6 hour Heikens hold above this low, I like that. I like this 6 hour SFP. Have we flipped yet? No. Have we flipped on the 5 hour? The 4 hour looks like it's on a downtrend. So, no. So, it depends. I'll go over that in just a sec. It depends. It depends how you do your market structure. In a general sense of market structure, no. The 4 hour is still in an uptrend. Okay, let's see. What about the 5 hour? Ooh, the 5 hour is getting a hike and actually flip. The 4 hour. 4 hour confirmed to flip. Went above the ribbon, got a sell-off as we would expect. I mean, I still would like to come down to this golden pocket, but I like the bottoming structure we put in. I really do. Yeah. I mean, I gave you guys a level to watch on the upside here. Obviously, we're not going to take longs in premium, right? Now, if it comes down to discount again, right? So it'd be like 116.8. Maybe this order block right here, or like 116.7. You may be able to find the RR there to enter a trade, right? Okay. Processing all the... So, yeah, so, Joey, so the band is a moving average, right? The band is a moving average band. So if you're talking about like the trend ribbon is bearish, yes, you're right. But in terms of market structure, it would depend. So if you're using Heiken Ashi candles for your market structure, then yes, the 4 hours in a downtrend because we had this bearish break of structure here. That would flip structure on the 4 hour on Heiken Ashi candles, which is kind of the structure that I like to use on crypto. But the standard market structure, you don't have two bearish candles in a row here. So your 4 hour low is down here, which is why when we pull our golden pocket, we're pulling it from that low, right? Or I guess this low's lower. Yeah, we're pulling it from this low, which is where we got that 115, 350 level. So, yeah, so in terms of market structure, technically on standard candles, no. 4 hour lows down here. Geeky, thank you. Yeah, good point. Yeah, guys, so if you want to see Heiken Ashi candles on your chart, if you hit this little down arrow next to your candles and you look at Heiken Ashi down here, and you can star it so it stays on there. And that'll give you Heiken Ashi candles. It's just a better candlestick. I mean, okay. Let's drop the real alpha here. Okay, so for example, if you go to your daily chart, so on your daily chart, so everyone was freaking out about the daily break of structure. Here, we know that it was just a range deviation, right? Well, I'm sorry, not there. Here. I guess it was a daily double SFP. Never mind. Never mind. That doesn't matter. But the Heiken Ashi daily low was down here, right? When you had the last two bearish candles in a row. Why is that important? It's not important for structure if you look at structures by closes. It is important for where your golden pocket is. You guys see what I'm saying? If you're using Heiken Ashi candle structure, when we came down and bounced from here, we were actually just bouncing from the golden pocket. Whereas if you're using standard candles to determine your low, your golden pocket was here and you didn't even really get a reaction from it, right? So that's just a little bit of alpha for you guys. Yeah. Okay. Is Cipher Major supposed to be used solely with Heiken Ashi candles? No, it works with both. You can use it with Heiken Ashi or standard candles. I like Heiken Ashi candles. A lot of people will tell you never to use them, and a lot of people will tell you they don't like them. It's just preference of the trader. I have found that Bitcoin, for me at least, trades extremely well with Heiken Ashi candles, especially like if I'm going to give you some homework. If you guys like alpha and you guys like learning stuff that's a little harder to explain on stream, go back in the chart and look at every time that we've had a major dump on the chart. And I want you to put on 5-minute Heiken Ashi candles, and I want you to look for an external bullish break of market structure. I want you to then do that over and over again and see the hit rate of that calling the bottom. Okay? You may find, enough to count on one hand where it flipped 5-minute and then stop 100 people and then that was the bottom or something like that, right? But you will find more often than not when you get a 5-minute external Heiken Ashi market structure break, especially if before that there was an SFP, that is where the dump flips. So some homework for you guys. Okay, especially 15-minute. 15-minute for sure as well. Okay. Cool. Why is it that when I put Heiken Ashi they don't show? I don't know. Don't know, man. Okay. Okay, so I've been going over nothing's really changed in terms of the levels that we're watching from yesterday's stream. So if you want to know the levels outside of what I just went over with this current range, probably just go there. I don't really want to go over all that again. So what did we cover? We covered the range deviation trades this morning. We covered a little bit of risk management. Okay, so a little bit more on risk management. So I've seen some people in the Discord that are risking more than 3% per trade. So 1 to 3% is going to be your general range that you want to be risking. The reason for that is because if you're risking 1% per trade, like a dynamic 1%, so you modify it with your account balance, you would have to lose something like 800 trades in a row to blow your account, right? And I would hope that in 800 trades you're learning your mistakes and you're not losing 800 trades in a row, right? That would be quite the statistical anomaly. You could flip a coin and go long and short and you'd probably win more trades than that. But like the idea is to stay in the game and focus on execution long enough that you can become profitable. So make sure that you are risking within, if you feel like 1% is not enough skin in the game, just don't go over 3%, please. Like, make sure you give yourself enough sample size of trades to allow your risk to reward to play out and keep you in the game and stay profitable. Also, important piece of trader psychology, don't define your self-worth as a trader by if you win or lose the trade, because you're already setting yourself up for failure because the market is random. And if you're setting your self-worth as a trader based on randomness, you are going to fail. So Make sure that you are defining a win or a loss by did I have a plan when I entered the trade? Did I manage my risk? Meaning, did I know exactly where I was going to get out of the trade, like have a stop loss before I entered? And do I know exactly where I'm going to take profit, have a profit level before I entered? And is that at least 2 to 1 RR? Yes? Okay, cool. Did I only put in 1 to 3%? Yes. That trade is a win, no matter if the market stops you out or if it hits your take profit. Because you did everything you were supposed to do as a trader and you took the trade. What does a loss look like? A loss looks like I entered a trade, maybe I used 7% of my account, and maybe I closed it at a 0.05% loss because I was scared I was wrong and going to lose money. That's a loss. That is a loss right there. Or maybe I closed it at 0.74 to 1 RR because I was scared it might go lower. That's a loss. Now, if you close it at 0.74 RR because new information came in, like maybe there was a break of structure, change of character, some actual structural reason to close the trade, that's a win. But if you're just closing it because you're scared or emotional, you should probably take a walk, make a plan, and re-enter a good trade. There's a lot more on that in the one-on-one that I did with Kelly. If you go watch that on the channel, I think it's like coaching a trader through struggles or something. We go really deep into trading mindset, so make sure you check that out if you haven't. Okay, so that's housekeeping. So what do we want to look at? So I think we've covered Bitcoin. So I'm going to open it up here. And if you got to go ahead and take off. We're just going to look at some shitcoins. So, oh, sorry, Chris, if you guys have kids watching. But yeah, go ahead and throw some coins in the chat and we'll take a look. Okay, CRV, sure. Dang. What is this? Okay. Oh yeah, alts are doing. Oh, did we go over this yesterday? Let's see. Yeah, I mean, I think I like the same levels that I said yesterday. I like 866. Man, it did well today, man. Yeah, if you're long on this, man, congrats. It's awesome. Heck yeah. Yeah, I still think 865 is where you should pay yourself. Nothing's changed on that. I still agree. Let's see. AVAX. Oh yeah, AVAX we didn't do. Oh man, you can tell it's been a while since I looked at this. Where are these anchored VWAPs from? Oof, AVAX, what have you done to us? Okay. Okay. Yeah, I mean, tap demands. Let's look at our weekly. Our weekly high is up here. Man. But we have continuously SFP'd this though. So you do have good RR here. If you're a swing trader, that's a 4 to 1. Let's look at our indicators here. Let's look at our daily. Wow. Talk about support levels on top of each other. But yeah, you had a daily buy signal here. You got liquidity in this high. Yeah, if we sweep this high, we'll probably get a nice pullback around like 22,783. If we do get a pullback, I mean, if we're going into like really aggressive, I mean, if Bitcoin's going to 150, then I don't think you're going to get this pullback to the 19,184 level, but that would be a great place to enter long. if we come above this high, because that would turn this into like breaker demand. Yeah. Shh. Okay. Let's see. Let's look at our 12-hour. One, two, three. Hits the low. Test of the low. Yeah. Yeah, I think if Bitcoin cools, I mean, yeah, you have your golden pocket confluence there. I think if Bitcoin cools off, I would love, mark this level on your chart, 19,182. I would love a long from there. If you're already in a long, I'd look to take profit at these highs here and at this high here. Wait. Is the stream okay? Put a 1 in the chat if you can see the stream. It's giving me errors. Good now? Okay. It's okay. 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 What was after your AVAX? Let's see. SEI. Oh, SEI made some moves today, didn't it? I was seeing in the Bear Den, a lot of people were talking about SEI popping off. Hey, we had this level. Look at that. We had this 38.95 level get hit. There you go. Nice. I gave you the level, Jilly. You take profit on your long. All right, cool. Cool. Yeah, this is awesome because I think yesterday, yeah, on the long. Yeah, hey, look at this. I think I gave you guys this long yesterday. Look at that. Heck yeah, guys. GG's. 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 Okay, cool. Awesome. Well, I mean, that just hit a take profit, so, I mean, yeah, I wouldn't suggest entering a long right here, and I definitely wouldn't suggest entering a short right here in this market. So, we gotta let SAI develop a little bit. I mean, you have your golden pocket. If you're itching to get back in, you have your golden pocket at 34.66. Obviously, be a good level to look to. Actually, that's not your golden pocket. Let's take a look here. So yeah, you have this support resistance flip here at 34.31. I like that. Somewhere in this region is where I'd look to get back in. Obviously, you have the previous highs trade as well. Oh, did that already hit? Yeah, that already hit. So previous highs trade. That already hit. So you could look for that to hold if you're trying to be aggressive. That's like 35.55 to 36. But if you're more of a patient, set the trap kind of trader, I'd be looking at like, yeah, 34.30. Unless Bitcoin just goes from here and it's going to be all season and this thing just pumps. But again, patience pays because you want high RR trades. You don't have the RR to long here. You don't have the RR. Okay. Nice. Okay. Virtual. Yeah. You asked about that earlier. Yeah, we can look at virtual. No, I think we were looking at this on MEXC. We were. Hey, this looks like not doing too bad either. Oh, dang. I put an optimistic trade on here. I think this had to be from another stream. Or maybe that would be cool. Oh, yeah. That was here. Wow. Okay, cool. So, yeah, I mean, you're just still in the trade from yesterday. Cool. Dang. I should be taking these trades with you guys. GG's in the chat. All right, cool. So, yeah, it's just bouncing from the level we gave yesterday. Again, the targets are going to be the same. So, it's going to be $2, and then $2.50. And you could always lock some in at previous highs, right? Like 184. Okay. Yeah, I mean, if you want to see virtuals, I would just go watch yesterday's stream. But basically, this is what we were looking at. Okay. I lost where I was. Hold on. Fetch. I see fetch. All right, let's look at fetch. Okay. This is not fetch. Okay. Yeah, Django, and get some sleep, man. Thanks for stopping by. Oh man, Cypher Matrix paid you on virtuals. Dang. That's a perfect weekly trade right there. Wow. Yeah, so we're just waiting for this weekly trend ribbon to turn back to bullish here. Sheesh. Okay. Daily. What's up, all set? How you doing, man? Welcome in here. Let's go to our 4 hour. Man, there's some crazy action in the altcoins, huh? Need to load up on some. This looks like an inverse head and shoulders possibly setting up here. He had 3 hits to the low, followed by like this little bull flag-ish. Let's look at our monthly. So monthly came back down to retest previous demand block. It's bouncing from there. We have monthly resistance here. That would be... Yeah, I think you hit your head at 108. Let's see, where's our downtrend line at? Yeah. Yeah, I think you, if you're in a long, I think you're like swing long, I think you're targeting 108. I can't really give you entries on this because it's in premium of the trends. There's better RR on other coins. But if you for some reason are super bullish on fetch, which I know it's like an AI play, I know it did really well in the last like run. There may be RR for like a swing position here. Let me see. Yeah, it can't really. I mean, you'd have to really tighten your stop there. I think there's coins that are in a better position than fetch in terms of risk to reward. But yeah, I mean, I think ultimately it'll probably hit 108. Okay. Sui. Yeah, let's look at Sui. I hold a lot of Sui. Okay. Dang, this coin is beautiful. I know we looked at this. I think we looked at this yesterday. Let's see what our spider lines are looking like. Man, man. I don't know when that was. It looks like it hit the target, but I don't know when I put that there. Okay, so we're hitting our head on... What is this? Oh, a fib extension. Oh, yeah, we're hitting our head on the 2.0. Oh, yeah, this chart was from a while ago. Yeah, if you guys took that trade a while ago, it looks like we're hitting the 2.0 trend extension. Yeah, this is hitting a 2.0 extension. I would let this cool off. I'd let Sui cool off. Okay. Previous highs, trend extension, up only, probably cooling off a little bit. Ooh, I do like this candle formation though. Yeah, the RR is not going to be there for a trade right now unless you're like scalping on a lower time frame, in which case I would just use Cipher Matrix. You guys know what to do. But yeah, in terms of like a market structure swing play, it's too overheated for that in terms of RR right now. Yeah, you could use this 4-hour low if you really just want to get a piece of Sui. Yeah, it's okay. It's a 6%. Yeah, if you're taking a swing up to the next fib target, 512. Yeah, you could get a 4-hour there. Yeah, if you're just really chomping at the bit to get Sui if you don't have any, 6% is not a bad risk, right? If you're buying this on a spot hold, yeah, 6 for 25%. It's not bad. I'd take this. Ultimately, it looks like next fib target is like 512, which is, I think, just under previous all-time highs. So yeah, 512. I like that. 484. Oh yeah. That's right. This is not the man. Too many charts on this. 482 was the level I think I gave you guys yesterday to watch for these higher targets. So you would take this up to 482. Yeah, it's a 3-to-1. So you can just squeeze a 3-to-1 in there. So if you really want to get some Sui, this is the trade I would take. If you don't have any. Okay. Sold and off that level screenshot at. Nice. Heck yeah, Cameron, good catch. Dude, you took those levels down, bro. Nice, bro. Yeah, those things pay. Okay. XRP, XLM. All right, we're going to do XRP and XLM. Oh, I didn't realize it's already 9. Yeah, I have to go, so we're going to do XRP here, and then I actually have to get out of here. Okay. XRP we did yesterday, and it hasn't really done anything actually. So we'll do XLM for you, man. Dude, up only. Yeah, SFP double top here. I would like to see it come back here. Yeah. Yep. I see it here. Yeah. I like that. Yeah, for sure, Bull Runner. Okay, guys. Well, I hope that you guys have gotten some alpha out of this. I really tried to pack the beginning with lessons about range deviations and just, a bunch of edges for you guys to make money. I'm going to be releasing more educational content on Cipher Matrix in the Discord for all you guys that have it in those education channels. I've meant to do it sooner. And then also, I have a couple more edges that I want to release in YouTube videos. So those will be coming this week as well. If you're new here, make sure you like and subscribe, ring the bell, and then join the free learning Discord in the description so you can chat with me and see intraday action there. Make sure you're in the Discord. We're going to do a giveaway at 300 subscribers, so make sure you're here for that. Help me get the channel to 300 so we can do that giveaway. And much love as always, guys. Wave Cipher out. Have a good one. Trade safe.